complicated question, but intrinsic value in options. Can you give a quick update, quick explainer on that?
Yeah, that's one of the very first things we touch on in our class because it's very important to know moneyness. So in the money options have intrinsic value. So basically the strike price is lower for a call. It will be lower than the current price. So what you're doing is when you're buying an option that's in the money, you have a coupon that says, hey, I have the right to buy this at a cheaper price than where it's trading. That's an in the money option, right? So if something's trading at $200 and you have a 190 strike call option, your intrinsic value is $10 because there's no such thing as a free lunch, right? No one in their right mind is going to trade that for less than $10 because that's what it's worth. You have the right to do something at 190 that is trading at 200 right now. So that's all intrinsic value is. It's the absolute value of that coupon you're buying, right? Now, if you're buying something that's at the money, if you buy the $200 call option and it's trading at $200, your intrinsic value is zero. So that option is not going to trade at zero. There's still some idea where you have volatility and time in there. Those are the other components of the Greeks that go into option pricing. So you might pay $2 and I don't know, you might pay $2.05 for an at the money option, right? So that $5 is extrinsic value. I like to call that the smoke and mirrors. That's the volatility and time component. So every option has two components, intrinsic and extrinsic. Sometimes it's zero for intrinsic, but then there's always extrinsic until you reach expiration. At the very moment of expiration, when the option's about to go to heaven and die, all is left is intrinsic value. Or zero.
Our terminology here today. This is awesome.
Yep.